What's up, everybody, guys and gals? Let's talk about S Corps. Natasha Varela, also known as the Moneyista, 20 years in audit, accounting, and tax, 13 in the large business international division of the IRS. So let's talk about S Corps. S Corps are a tax designation, unlike an LLC. An LLC is a business designation, okay? You form your LLC first, and then you designate S Corp status, and you only do so if you can afford to pay yourself as the owner. So here's the difference. With LLCs and sole proprietorships and partnerships, you are subject to self-employment tax, okay? And you cannot pay yourself a salary as the member, right? Owner member. But with an S Corp, when you designate S Corp status, that's a tax designation, you must put yourself on payroll. Okay, you have to pay yourself a salary. Why? Because S Corps don't pay self-employment tax. So the government, IRS says, hey, we realize you're an S Corp, so you're avoiding self-employment tax, but you have to pay yourself a salary as the owner. What happens when there's no salary? That is a big red flag. Okay. No salary on an S Corp looks like you're trying to avoid self-employment tax, and you're not paying your payroll taxes, right? Your employer-employee taxes, right? You have to run payroll, you have to pay your Social Security, Medicaid, all that good stuff, all those taxes that come out of your check. So you're not going to avoid taxes altogether on that side, but you will avoid self-employment tax if you designate S Corp status. Again, if you do not pay yourself, that is a red flag. And if you can't afford to pay yourself and you already are an S Corp, go ahead and revoke your S Corp election until you can afford to pay yourself. Your salary must be reasonable. Okay. A lot of times you will hear people say, 80,000, 90,000, some random mark in profits before you can pay yourself. The fact is, you have to benchmark yourself against other companies in your industry with like sales, right? So you can go to bizstats.com, bizstats.com, choose S Corp, choose your industry, drill down as far as you can to your business type, and then plug in your sales and then see what the salaries are, right? It'll give you the number and the percentage. So it's not necessarily a mark. It is more so, are you comparable to other companies of your like in the same industry, right? With comparable sales. So a lot of times people can't afford to pay themselves, right? Not yet, usually in the beginning. So you cannot designate S Corp status because you can't afford to pay yourself. My real estate investors, an S Corp is going to be a red flag because usually, the income from your rentals is not enough to give you a reasonable salary, right? So I would stay away as a real estate investor from S Corps until you have enough, income, which takes usually a lot of properties, right? Commercial and residential, before you can pay yourself as the owner of an S Corp. So just be careful in real estate trying to designate S Corp status and pay yourself a salary as an investor. It's probably not the best route right away. Very rarely does anybody make enough in income to pay themselves. So I stick to an LLC. But for my other business owners, when you reach a certain profit, you go ahead and check out your benchmarks, right? Again, I use bizstats.com and see what you can pay yourself. But you have to put yourself on payroll. You have to put yourself on payroll, and you have to use a payroll company. Don't attempt to do it yourself. All right. So I hope that was a good tidbit for you guys. If you want to join the next free live training, go ahead and click the link in the bio and register. It's free. All right. Bye.